Hey, what's up, guys? Today we took a short on MNQ and we took two shorts. You'll see one here, but this was our actual full trade. We canceled this one. I'll get into that right now, but let's more importantly focus right now on the model itself. Liquidity grab, established trend, and then our entry model. Same three-step process we follow every single trade in session. And yeah, let's start off with London session. Okay, I'm gonna be honest, I was very bullish going into New York simply because of all this bullish price action, right? We don't know how long these will go, so I'm gonna place my bets on the direction every single time. But today, why did we go short? How did we find two good short setups even through all that bullish price action? So let's get into that. Step one, what we need is a liquidity grab. We got that right here, 943. We took London high level. We did expand past away from it. Now here's the thing that had me a little confused today. One, we had a very bullish London, right? Two, look at this whole sequence of candles, not one seller's candle, all buyer's candles, breaking through London high with conviction, setting a nice high, right? So I was naturally leaning bullish because this is A plus price action. However, if you've, oh, excuse me, if you know about 1 hour fair value gaps, right, you know that if, for example, today the trend was actually gonna be bullish for New York, that we would inverse this one gap, the 1 hour gap. Somehow we would end up here, have it be a retracement and then an inversion. Doesn't matter how it happens, but we would have had an inversion and then an expansion away from it, validating a short-term trend. So we would seek an entry model then. So what I'm saying is we had our liquidity grab, check. This would have been an established trend for me, check. And now we seek an entry model. But we didn't go for longs, even though we had lots of reasons to be bullish. Why? Because we filled this gap perfectly, didn't inverse it, closed beneath it. Second attempt to inverse it, didn't fill the gap completely this time, again closed beneath it. Now we have a bearish gap right here. If you can see this is a bearish gap. We rebalance it, expand to the downside. Another bearish gap, we rebalanced it, expand to the downside. Bullish gaps, two of them right here, we inverse them and then expand to the downside. I mean, you kind of see the picture that's getting painted here, right? This looks very bullish, and then all of a sudden, it doesn't look super bearish yet, but definitely sellers are more in control than buyers. You're getting lower highs and lower lows. Now, I wasn't still convinced in taking a short even through this setup, Why? Because it's normal for price to sweep London highs sometimes, come back into the range, this zone, and then we end up having a bullish day. And that's what I was thinking was going to happen simply because of all the price action through London, right? So I was not willing to take a short setup in this opportunity here, I told myself once we're below New York low, two things would have happened. One, we would have created lots of bear structure. Two, we would have taken out a significant level during New York, creating a new New York low. Then I would be convinced that we're probably going to go for the London level, the London low level. So I waited for New York low to get tagged. As soon as that happened, I was looking for a setup. We took one right here. This was, oh wait, I feel like I'm getting ahead of myself, guys. Let's rehearse or review this. Step one, liquidity grab. Step two, establish trend. We have all this bearish gaps getting created, respected. Created, respected. Created, respected. Breaking structure, creating a new New York low. I mean, you can't deny, guys, that this is step two. This is an established trend. Let me mark it up one last time. Just trying to make this as clear as possible. There we go. So although it's not A plus price action, it is still telling you that the sellers are outpacing the buyers, even if it's a little messy. So why would we go long? We won't. We would only go short now. We have step one, liquidity grab. We have our established trend, and the entry model was this bearish gap. We did rebalance the gap fully, closed beneath it right here, so I entered after confirmation. Why did we cancel it? Because I didn't actually see this gap until after my entry. And I thought it would be normal for us to come up here, rebalance, close beneath this one, and this would be a better entry for me. So simply because of that little bit of doubt, I canceled it and I told myself that was the best thing to do. Now we didn't rebalance, okay, but we got a second opportunity right here. We have a bullish gap created. You see that? And we have the inversion. Through the inversion is when I entered. And because we took out London high and we had a strong bearish trend, to me it seemed like there was a high chance we would come for London low. So instead of having our usual 2R TP, which would have been right here, I thought there's a high chance of us reaching London lows. So therefore, I'm going to have my TP before it at 410 to give us an even higher chance of realizing TP. And that was pretty much how we found this setup. We had our liquidity grab. We waited for an established trend after the liquidity grab, and then we seek our entry model after those two appear. I do want to end this video on a very important note, and that is the fact that we used 1 micro today. Why did we use 1 micro? Because we already know and understand that trading is such a mental game that you want your mental state of mind to be at optimal conditions for trading. And if it is not, I believe you shouldn't trade. That's just my opinion. But if you're going to, like I did today, because I'm human and I had the desire to, that you do something that'll still protect you in the sense that you're going to follow your rules no matter what. For me, that was sizing down to the lowest leverage possible. Example, this 1R was going to be 500 on a normal day on this account. Today was 84. So much less. Why? Because we weren't looking at the P&L. We were focusing more on today's the type of day that because of personal life and whatever, that our state of mind's not all there. Therefore, if we're gonna trade, we're sizing down to make sure we follow all rules perfectly. That we look for these 3 steps and we put on the right amount of risk and we target rate or normal levels and follow everything perfectly regardless of how we feel. In trading, 9 times out of 10, if you're not feeling great, you'll make a decision that you're probably not happy with at one point. So if your mindset's not all there before the session, I would say or you don't trade or do something like today, size down dramatically. One could argue that if you just simply follow your rules, you could still put on your 1R. Yes, what I say is, I'm human, and if I'm not feeling great, I'm going to size down. It helped me today, and I'm really proud of this trade. 118 points. Would have been 1,300 on a normal day, but it's okay. 247 on a Friday with, not the most optimal mindset, I would say, is a big win for me on discipline. So I wanted to share that with you guys in order to remind you that following your rules is priority. Yes, having an edge is great, but the edge doesn't exist without your rules and your risk management being executed perfectly every single time with the edge. So I hope that makes sense, guys. And if you want to watch more about this model that we trade, just watch the last reviews. We always go through the same 3-step process. All right, you guys have a great weekend. Peace out. And yeah, follow your rules, guys, or do your best.